This is the largest wealth creation opportunity, I think, of most of our lifetimes, and helping bring in people, diversity, smart, excited people, I think is a shared mission for all of us.
Hi, Michael. It's very, very nice to have you here on Ledger Nation. Welcome.
Thank you. Thank you. It's good to see you again.
Yeah, Michael, we met a few weeks ago in Monaco. We were together during a panel discussion, and I thought it's so interesting what you do with your crypto hedge fund, because I've never actually spoken to someone that has a crypto hedge fund. So I had to invite you to my YouTube channel. And I would love to talk to you today about your journey into crypto, how you started your hedge fund, and yeah, what you actually do at the crypto hedge fund that you're operating. So maybe with the first question, Michael, you were at Google for, I think, over 14 years. How did you move from Google to crypto?
Yeah, I mean, I like to sometimes talk about the narrative as a like Web 1.0, Web 2.0, Web 3.0, because I was at Yahoo very early on, and then I spent some time at DoubleClick, and Google acquired us, and I was at Google for 15 years. I first started looking at the cryptocurrency space. I probably bought a Bitcoin in 2015, which was very challenging, getting a software wallet spun up, moving money into a wired ecosystem. Actually, at the time, I was having trouble getting a wire done, and I bought Linden dollars, which is the currency from Second Life, and found an exchange that would trade me Bitcoin for Linden dollars. So when people say, what do you think about metaverse currencies and the metaverse, like, you know, I guess I was there at the very beginning of that. I actually became an LP, like invested into this fund before I joined it myself. So the COO of our fund, Greg Moritz, who was also at Google a decade and then 3 years at Microsoft, he met our CIO, Ray Ng, and they decided to start a fund, and Greg gave me the opportunity to invest. So I invested a full year before I joined, but Ray had been running this as a private fund, friends and family, as a limited partnership since 2018. And they only opened it to outside investors at the beginning of this year. And, fortunately for me, they realized they needed an extrovert on the team. So they invited me to join. And after the year that the fund had last year, I was pretty excited to join as well.
Yeah, the extrovert that goes to conferences. Before we started the recording, I asked you, aren't you at a conference this week? And yeah, you're at a conference this week, but in London, so where you live. Definitely you're an extrovert, that's true. Exciting that you basically joined as an investor and then you became part of the company. This is, I think, a very interesting way, because you could get to know the service that a company provides and then decide, okay, do I like it? Do I share the values? Is it a good service? And then join the company. Tell me, what is a crypto hedge fund?
So we are a vehicle where our partners, investors, can invest in our fund. And our fund in particular is an actively traded hedge fund, right? So we invest in digital assets. We move in and out of the assets with the market timing, cost-based averaging in and cost-based averaging out. So trying to miss a lot of the volatility and a lot of the retractions in the market, using our tech expertise. Our entire team have pretty heavy tech backgrounds. From Google and Microsoft, and actually Ray Ng, our CIO, despite being a medical doctor, also built and sold a information security company. I won't do a long talk about his background, but Real Vision Crypto just did a 1-hour interview with him, which is, I think they titled it, "How Does a Medical Doctor Become a Crypto CIO?" So we use that information to really try and cut the wheat from the chaff, so that you're investing into projects that have real utility, that have value, that we've gone through security and governance audits on and know are going to stand up as more and more projects are actively targeted in the space. And then use, a combination of on-chain metrics and technical analysis to decide when we're moving in and out of these. So it's essentially a lot of people who invest themselves. I'd say our investors fall in a couple of different categories. We have people who are phenomenally into crypto, but would like to focus on building awesome, interesting things and not worry about the markets and not be managing it themselves. We have a number of people on the opposite end of the spectrum who have, crypto is still really early stage in its adoption around the world. And I might even say distributed ledger technologies or blockchain enabled assets. I find the term cryptocurrency actually a little problematic and confuses a lot of people. But they've heard enough, they've had enough people talk about it that they're like, oh, I should put 2% of my net worth or 5% of this family office to have some exposure, but I still don't want to learn about it or read about it. A friend of a friend said these guys are good. And there's a lot of due diligence on top of that. But that gets on. And then you have a lot of people, quite frankly, like myself. So I'm not a trader on the team. I am the fly around and go to conferences, who just got overwhelmed, right? It is a 24-hour market that with constantly evolving new themes, with constantly evolving new technology, with huge security risks. I mean, I read a piece by, it was a long Twitter thread, but essentially this gentleman had more than $1 million tied up in Luna. And, the merits or drawbacks of that can be debated, but he had gone to an Ashtanga yoga retreat that had no internet for 7 days. So was unaware any of this had happened. Probably wasn't, that's a large enough position. It wasn't sitting on an exchange for stop losses. And his 7-day silent meditation cost him 100% of that asset, right? So having a team that's watching the markets 24 hours and is actively managing is a very different situation than trying to trade yourself.
Currently, of course, the environment is not very favorable for people invested in crypto. We're currently in June 2021 in crypto winter. Can you tell me, how do you manage this with your crypto hedge fund? What is your strategy to still have maybe a positive return, or how do you manage the risks right now?
Yeah, absolutely. So we are totally happy to move to cash and cash equivalents. We've been primarily in cash and cash equivalents since November. To be totally honest, we're not at a positive return year to date. We're down, I think, right around 17% year to date. That said, that is phenomenally ahead of the market, ahead of the asset. So when we pace ourselves every month, we compare ourselves with the Bitcoin, Ethereum, the S&P 500, the Barclays crypto index, and a couple of other positions. And, we're never going to be able to top the exact tops and the exact bottoms of markets. But by cost-based averaging out of the majority of the loss, we actually are looking at the market now and seeing a lot of underpriced assets, like a lot of opportunity to buy. And that doesn't mean they might not swing a little bit lower before they start going up. But if you believe, as we do, that blockchain-enabled digital assets, distributed ledgers, are the infrastructure that is going to build the next generation of technology for this world, which means the market will recover at some point, then you have a great buying opportunity right now. You have companies that have, they have the same number of transactions on their blockchain as they did 2 months ago, 3 months ago, 5 months ago, with a much lower cost to get into it. And that's actually a metric we talk about a lot. We see transactions over value of total market cap of crypto to be very much like your price to earnings ratio. And if you looked at a big company, right? But if you look at a company like, let's even say AOL, right? And AOL produces, $100 million in revenue every month. And there's some big news story and the macroeconomic world, and the price of AOL stock, their market cap, gets cut in half, but the revenue remains exactly the same. Then suddenly buying into this revenue chain is a much better deal. And we see that the same way. When you look at a protocol like, Avalanche as a layer 1 protocol that we think has a lot of utility, you can see that a lot of the transactions, when you look at on-chain metrics, are smaller transactions, people actually using the chain rather than large transactions, people just doing speculative investment. That hasn't changed, even though the price of Avalanche has dropped a lot. So we see that as, a good underpriced asset. So yeah, I think a lot of people came in at the top, and there's certainly a lot of people hurting within the crypto ecosystem right now. But for people who have been in this for a while, right? We had the crash in 2018. We had a crash in 2014. We're in that 4th year of the 4-year cycle, which is tied to the halvening. It is the first time that we've had that point in the cycle while there is a global macro recession, while the Fed is raising interest rates. So it'll play out a little bit differently, right? History doesn't repeat itself, but it rhymes is another one that we like to quote a lot. So I think getting into a defensive position, looking for the right opportunities, making sure that your investors are people who believe in this in the long run with you.
Yeah. Okay, Michael, you showed me a slide before we started recording, and this is the slide where you basically explain how you analyze the investments of the crypto hedge fund, what the strategies you use, let's say. Could you show this to us and talk about, how you analyze investments? And I was particularly interested in the on-chain analysis that you mentioned.
So I've talked a little bit about a couple of these things. So one is, if there is not a code audit by a major there are about a dozen now pretty reliable code auditors out there, then you're in real early stage, right? You're talking about investing in someone's idea, regardless of what they've built or not, without knowing that it's a technology. On top of this, we're doing our own secondary code audits. As I mentioned, Greg came to us from Microsoft. Ray started a information security company, looking for weaknesses, looking for flaws, making sure the code says what the white paper says it's going to do. This is especially important around token economics. I read a lot of white papers that say, we are committed to not releasing these tokens until this time. And it's like, what does that mean? Like, and how is that, does the code release the tokens at that time or not? Are you going to be inflationary or deflationary or not? So, really getting in there yourself. And that's something that not everyone's capable of. There are a number of great people you can follow on YouTube, on Twitter, on Discord, depending on which area you're looking to invest in, that do these sorts of analysis.
On one side, you evaluate the functionality. So basically, is the code doing what the white paper is saying they're going to do functionally? But you probably also analyze it on a technical perspective. So does the code have any bugs, or is it working properly?
Is it working? Is it safe? Are there glaring weaknesses? Then the second set we talked about earlier is really on-chain metrics. And I mentioned this again, looking at transactions over market cap. But, when you go to these crypto conferences or watch people from these companies, everyone will talk about their adoption, and the speed they're growing. But using various tools, chain analysis is a big one. You can see how, and a great example would even just be like Etherscan for Ethereum. You can see how many new wallets there are, how many of those wallets are funded, right? And a great example of this, the controversy going on around Twitter and Elon Musk and how many Twitter users are bots or not, right? Twitter says we have this many users, we have this many new users a month. We could look and be like, well, they had 10 million new wallets sign up in the last quarter, but 9 million of those new wallets were never funded, or funded, did one transfer and were never used again, right? Like the being able to look at infrastructure, which layer one should be the infrastructure to build other things on, you can see rather it's being used or not in a way that you can't for private companies, you can't in commodities, you can't, what is the demand for Avalanche this month versus last month? Where do we think it's going next month? And are those numbers growing? Aren't something you have to take their word for it. Then, again, we'll look at a coin comparison, especially in layer ones. You read people's sort of marketing material, and everyone thinks they are faster, more secure, less expensive, longer uptime. I think is the white
Yes.
paper. Look, just invented new crypto right there. We look into the team. We're very blessed that oftentimes we're able to meet with the team themselves. I'm an active member of Developer DAO. I'm an active member of Shark DAO, which is the largest owner of Nouns outside of the original Nounders. We're very involved at ETH Denver. We spend a lot of time, and most of these people are really excited about what they're building. So they're happy to sit down and take a few minutes, especially from a technical perspective with you. And then once all of that's done, we're using those on-chain metrics and that chart in a chart-based technical analysis to decide when to move into and out of those cryptocurrencies. And I'll just move back one slide here for a second. So once all of that auditing's done, we consider that asset to be tradable within our dynamic holdings. And dynamic holdings is, it's what most funds would say are their long positions, things they're going to buy and hold, and they believe in this over the next year, 3 years, 5-year time horizon. We absolutely believe in these technologies on that time horizon, but we still trade in and out of them on a 3 to 5 month cycle in general, right? Even in the astounding 2017 run up where Bitcoin went from 300 to 20,000, you had these retracements over and over again of 30%, I think of over 40% twice. And by cost-based averaging out nearish the top and cost-based averaging in nearish the bottom, even if we miss 10% on each side, you're able to really accelerate your returns over and over again.
Okay, so that's very, very interesting. I see you do also yield farming.
Yes.
Okay, how do you do that? Do you do some decentralized finance protocols?
Yeah, one of the things that's really neat in blockchain is thematic and repetitive patterning, right? Because these technologies are open and viewable, oftentimes when something works really well on one blockchain, you will have people lift and shift that code to rebuild it on the next blockchain. So a great example is the decentralized automatic market makers, right? You have Uniswap and SushiSwap on Ethereum, and they incentivize people to provide liquidity for quite a while. There was a period last year that Avalanche, with its AMM Pangolin, those pair of tokens together locked up to provide liquidity were yielding at 154%, which again, we don't expect that to happen forever, but Avalanche had just raised a $250 million ecosystem fund in August, and they were using that money to incentivize people coming over to their platforms, new developers to build on their platforms, and we were able to lock up those tokens. Now, what's really neat, we had done a technical analysis on the pricing. We saw that the pricing was going to fall. I think we originally did an analysis around the 60s. It dropped to 13. It was around 13 to 14 when this yield first became available. But we actually saw it as staying in that congested period. So we were able to use a perpetual on an exchange to short our own position. And what that means is, when Avalanche went up, we lost money on the short, but made money on Avalanche. And when Avalanche went down, we make money on the short, but lost money on Avalanche. So we're not exposed to the delta, the changes in price of Avalanche, but we're still yielding this 154%. And I think that went on for about 2.5 months, where Avalanche went from 13 to 9 to 13 to 6 and just stayed in there. And then using a little bit more quantitative algorithmic, again, looking at it's just referred to as technical analysis on the whole, Avalanche broke its 21-day moving average. We closed those shorts. We continued farming, and it rode up. I think in that run up, it went into the 70s. We started getting out of it in the 60s. Because again, we can't time tops, but that was right around when Solana was starting to really incentivize yield farming on Radium. So we moved a lot of those trade positions over to there, and we're able to repeat this thematic trade on the next chain.
So Michael, I have one last question, and it is, how did you learn all these things to work what you're working? So how did you educate yourself into blockchain, crypto, investment knowledge, to work what you do?
Yeah, I mean, it was a real process. This is my first job I've ever had in finance. I took my Series 3, which is a commodity broker exam. So in the US, cryptocurrency is treated as a commodity and regulated as such. And there were not many questions about crypto on this test, but putting in the time there. But honestly, people who would like to learn, there are great resources now. I am a huge fan of Real Vision. Real Vision to us is sort of like the Bloomberg News for crypto. They put out a ton of material. They're partnered with Delphi Digital, which is a huge fund in the space. I really like Blockworks newsletter. I love, if people are trying to get into the NFT world, Two Bored Apes and Zeneca both put out a ton of great material that's worth reading. Did I say Blockworks already? They do the permissionless conference. You can also look at the top 5 hedge funds in the space that are larger, and all of them have newsletters you can sign up for, rather that be an Arca or a Pantera, and then just follow people for a while. Especially if people are looking to trade themselves, and you find some charismatic person on YouTube who you think knows what they're doing, like, write down those trades for a month. Don't make them yourself, and see how they play out. And when someone says, oh, this is the best next new crypto, write it down. Write down the day you watched it and set yourself a calendar reminder to check every week for a month. And if it turns out that someone is right 4 or 5 times, then you can start following trading them. But at the end of the day, again, we are so early. there's so little adoption of crypto. People ask me, do we think it's 1999? And I think it's 1992 or 1993 for the internet, right? Everyone's heard of the internet. You have a friend who says they're getting rich on it. You're getting 30 AOL CDs in the mail every month. That may be too American of a reference. I don't know what their marketing is like in the rest of the world. But then you go on it and you're like, this is just a bunch of people talking to each other. I don't understand what the big deal is. For blockchain to be the infrastructure for the rest of the world is going to require the creation of so many new pieces of infrastructure, so many new blockchains, so many picks and shovels companies that you shouldn't hurry, right? This is going to be the journey of the next 10 years, the next 20 years. This is going to be industrialization or the invention of the internet. And taking the time to find those right positions. I guess I'm not great with sports or sports analogies, but like
you don't have to do any. You don't have to do any
yeah,
sports analogy.
You don't have to swing at every opportunity, right? Even if something looks like a good opportunity, it's not going to be your last opportunity. And the people who know a ton about this space, they may have a decade of experience versus like if you wanted to go into private equity or macroeconomic funds, there are people who have been doing that for 30 years, 40 years. So it's not too late, but take your time. This is the largest wealth creation opportunity, I think, of most of our lifetimes, and helping bring in people, diversity, smart, excited people, I think is a shared mission for all of us.
Thank you very much, Michael, for sharing your knowledge, for telling us about your journey, for showing us how you analyze your investments. It was very insightful.
Thank you. Thank you. If anyone wants more information, our website is AltTab.Capital, and you can contact us there.
I'll leave the contacts in the description.
Great.
Thank you.